Are there any scenarios of non-performing notes that I do invest in? Absolutely. So if you guys are going to buy non-performing, you want them to be in a non-judicial foreclosure state, not judicial, okay? Most of the East Coast is a judicial foreclosure market. Most of the West Coast is a non-judicial foreclosure market. Now you guys can go to our website at securedinvestmentcorp.com and you can see that, which states are non-judicial, which states are judicial, okay? Second thing you should be looking at, I don't want to buy any note that is owner occupied, okay? If some owner is living in that property, I'm not going to touch it with a 10-foot pole. Even if it is so dramatically discounted that the numbers are off the chain, I don't want to have to deal with the owner occupant. Now, it's not uncommon where we'll do the due diligence on some of these notes and we'll discover that it was originally owner occupied, but that owner occupant has now moved to Maryland and they're renting the property out. I would buy that note if I can legitimately prove that it is not owner occupied. Even though it's an owner occupied loan, but they don't live there anymore, I would consider buying that note. Okay. Secondly, if I'm targeting a yield, I'm going to buy it at a 36% yield discount. Okay. So when I do all of the math, after I spend all of the money on attorney's fees and eviction costs and rehab and realtor fees and taxes and insurance and all of the expenses that come with owning a non-income producing liability at that point, do I yield 36% annually? Okay, so if I'm looking at a performing asset, option A, I need to get 11. If I'm looking at a non-performing asset, I need 36. Okay, because my risk on option B is 3 times greater than my risk on option A. So risk equals reward. The higher the risk, the higher the yield. The lower the risk, the lower the yield. So in that example that I just showed you in option A 9% yield, it's not 11. I'm probably not going to buy option A because I need an 11 yield. Now, could I discount it, right, from 550 instead of 550? If I discount it to 515, the payment would give me the 11% yield. I could discount it in that way, but not if the seller's not willing to take a discount. And if I was the seller of that note, I wouldn't take a discount. I'm getting 9. It's a great rate of return. I could probably sell that note to somebody else and sell it to them at 7. So you got to consider the audience of who you're selling to, the audience of who's buying this paper.